Hi everyone and welcome to EVE Talk, your weekly look at the EVE Online markets. I'm your host, delonewolf, and it's the holiday seasons, but on this EVE Talk we're going to start a bit differently than the usual way I start with just the minerals and stuff like that, because CCP has come out with a new dev blog about all the market activity and that's been going on just before Retribution, so all the preparations players have made before Retribution, or at least most of these dealt with the minerals. So I think that's pretty interesting, because last week or 2 weeks ago we had seen that all the margins for manufacturers are gone, and there we go, pre-Retribution trading. I think there's just, this is pretty much the whole dev block right here, so quickly go over that. It's about all the trading that's been going on pre-Retribution. Here you can see production of frigates, destroyers and cruisers. These have increased quite a lot, as you can see. Those that were going to be changed have all known, especially the cruisers, a serious spike in the number of ships produced. On top of that, over here we can see that Noxium, Isogen and Zydrine prices have contributed most to the rise in the mineral price index. The prices of these three minerals rose by 17, 20 and 26% respectively. On the other hand, Tritanium, Mixalon and Pyrite have hardly moved. But I guess these two factors do explain why margins for manufacturers are basically gone now. The prices of all the rarer minerals, the more rare minerals, have risen by around 20%, and most of the manufacturers that stay in high sec have to purchase these. So yeah, for them of course that means buying these minerals at an increased price, not a very good thing for their margins. On top of that, people have jumped at the chance for these new cruisers, destroyers and frigates to increase in demand by producing an enormous amount of them. This obviously has increased supply substantially, basically pushing the margins even further down. Really only those with perfectly researched BPOs were probably still able to make a profit from their sales, but most other manufacturers, yeah, they were out of luck and they were selling either at production cost or even below that. The other part of the dev block is about new containers that were going to be produced by players, I think. And the following graph shows the trade in containers. And there you guys, you can see before the dev block about container changes, there was hardly any trade in there or any fluctuation in the amount of trades going on with containers, because most of these were just begotten by NPCs. Right there at the dev block on container changes, there was a huge spike, so some people took the opportunity to make some trading money, basically, because really at that point there was no reason yet to change your behavior concerning containers. But yeah, that was some speculative money that's been made by the guys that have been able to sell high there. And right now we're seeing more fluctuations, at least this couple of really big spikes in the amount of containers traded. But I'm not really sure how that market has evolved at the moment. The data shows some large but isolated spikes in container sales, but not an all-out frenzy. Total container sales in October and November were only 86% above the total sales value for August and September. It's heartwarming to see that the majority of players did not risk their money on CCP repeating the mistakes from the introduction of PI. However, there were a few that did. The biggest single buyer of containers in that period, from the dev block announcement to deployment, bought containers for 28 billion ISK. There's a good chance there's a station out there somewhere where you can get a good price of containers in the secondary market. Yeah, so some people did speculate that that there would be problems basically with the introduction of containers produced by players. This did not work out, so whoever bought 28 billion ISK worth of containers probably has a serious economic hangover from that. And after this we basically have the mineral price index, which rose 8% in 1 month, although this was not very visible during my EVE talks, because I generally cover the minerals that I can mine myself. And let's speaking of that, let's start with doing that. And right here in titanium we can see a small downward spike on the 5-day moving average, and I think this translates as well in the prices in station. Sellers for 598 and buyers for 594, so that's couple just a little bit down. It was before 6 ISK last week, and right now it's down a bit, which is of course good for the margins of manufacturers. Let's have a look at pyrite. Is that the same thing? Well, the 5-day moving average just came down from a bit of a spike and jumped back down below the 20-day moving average. So we might be seeing a tempering in prices for pyrite as well. That one is now 1369 and 1366 for the buyers. It was above 14 last week on JITA prices. Pretty interesting. Let's have a look at Mixalon then. Yeah, correct the data point right at the end. You might be able, although it probably won't be very visible on the 3-month chart either, but you can maybe see that the 5-day moving average has also dipped just below the 20-day moving average on the Mixalon chart as well. So let's have a look at these prices. Are they back below 60? Absolutely, 57.98 and 56.90 for the buyers. So very interesting. First signs of some lower prices for the minerals, the very common minerals, I should say. I'll have a quick look then, just out of interest, at South Rhine. There is that increase for October, November, pretty flat. After that, we maybe indeed a small lowering at the tail end. Let's have a look at Noxium. Yep. Also going down a little bit after that sharp rise for October and November. So this is not very good news for miners, because they'll be getting less money for their minerals, but this can be good news for manufacturers, because they might finally be able to sell their ships once again, their Tech 1 ships, with some margin in them. Maelstrom still looking pretty flat right there. Let's have a look at the Drake, what that one's been doing in last week. Also, you can see the 20-day moving average moving on a straight line, and the 5-day moving average is dipping above and below that. So looking pretty stable on the Tech 1 larger ships, I should say. So yeah, I think it's looking like we might have the start of a downtrend in some of the minerals. All of the minerals, I should say. So a quick look at Megasite. That one's a bit more hesitant, but maybe also the 5-day moving average moving down a little bit just at the tail end. Meaning that miners will get less for their mining time, but manufacturers might get a bit more for manufacturing the actual ships. Pretty interesting. Moving on to Tech 2 markets with the Guardian. Quite a few corrupted data points in there, so it's hard to judge the scale of the chart, but it looks a lot more stable here at the end. Let's have a look at the 3-month chart. Yep, these really big fluctuations after starting December, a lot less. Maybe just because of the holidays, people are doing a little less active trading. I think that might be an explanation. Right now I'm not counting out the market just yet, but I do think the margins will be pretty slim. No, actually, what the hell is this? Sellers in station 124, buyers in station 90 million. What the hell is that? I'm expecting the chart to do some weird stuff next week, because looks like somehow all those buy orders are gone. Is that even correct? Looks like it. There are virtually no buy orders. I mean, very few of them. And sellers at around 124, 38 of them. So that's probably the price it's hovering around on the chart as well. 124, 125, yeah, possibly. So this is pretty weird, these buy order situations, and yeah, people do still seem to be trading in them, or maybe just people aren't selling them, and so that's why buy orders have fell so low, or someone has sold an enormous amount of them and filled in a lot of buy orders. That's a possibility as well. Yep, Tech 2 market still a very interesting fluctuating market, and the first one that really surprises me, just, I mean, 34 million ISK margin on Guardians on the market at the moment. Just put up some your orders up there at around 110 or something like that. You'll be able to pick up Guardians normally. This is pretty damn weird. Let's have a quick look then at the Tech 3 market. Melted nano ribbon chart. 20-day moving average back on the uptrend. 5-day moving average took a real spike and then a dive back down, but it's still staying above the 20-day moving average. So I would say this rise in prices might continue. I'll have a quick look if this has had any influence on the Tengu. Let's have a look at the Tengu chart. Yep, back up as well. So there you go. Price dipped below 185 for just a second, which was the floor I was keeping an eye on. And yep, back up a little bit. Very interesting. Let's have a look at the Loki, which is back up as well. So it looks like people that have taken the opportunity for those very low prices right there, really the bottoms for on a whole 1 year chart to purchase some Tech 3 stuff might have done a good deal, because it's looking like while the mineral index is starting to go back down a bit, the Tech 3 market does look to be picking up again with increased prices. Very interesting stuff. Quick look at technetium, no change there, and Galente fuel block still extremely low. So yeah, once again, unless CCP decides to unveil post changes or changes to how technetium is being produced, I don't think we'll see any serious movements there. And finally, I'll end up with the Plex, of course, which there we go. Finally, some downward movement in there. You can even see the 5-day moving average heading back towards 550 million. This is once again very surprising to me. But there we go, sellers 551 in JITA, buyers 546. That's amazing. I would have thought 35 million higher was going to be the new bottom. But this correction that we've seen after last year's expansion is materializing right here as well. My expectation is that a lot of newer players are willing to fund some of their activities with Plex, thus increasing supply on the market. That's the explanation I'm thinking right now. This would mean, in my opinion, that Retribution is very successful expansion, because it's been able to keep the interest of more and more players that are willing to fund their activities with Plex. Yeah, we're going to have to keep a close eye on this one if you're interested in Plex trading, because I did not expect this correction to materialize anymore. But the 5-day moving average is moving down quite seriously, and prices in JITA are, in my opinion, most of the time at the forefront of Plex changes, and they've gone from 590 to 550 in just a few weeks. So the correction is here, although quite a bit later and a lot sharper than what I would have expected. Very good news, of course, for people that like to fund their account with Plex, and also for people that are looking to make some money in Plex trading as well, I think, because this is a time when you have to look out for some buying opportunities. Anyways, there you go guys, a quick look at the EVE Online markets, and I will see you all next time.